Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Friday afternoon. I hope you all had a great week. Today is the last trading day for the week. Obviously, markets are closed during the weekend. As always, before we jump into the markets in my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and check out the Elliott Wave Principle, which you can read online for free when you're using the link that's in the description down below. And you can use that same link also to get yourself a physical copy. With that said, we can jump directly into my portfolio and hide this message. Gabby is also here, great. And as you can see, we have a slightly green start, or it's break-even start with a green touch into the day. As always, our biggest position is our GameStop, our 600 GameStop shares, against which we have 6 covered calls that expire on March 21st at a $36 strike price. So as always, we first look at how GameStop is doing. We recently updated part of our labeling. So we did not label this area here in GameStop, but we focus on this area because this here is most likely, in my opinion, a 1, 2, 3, 4, 5 with a truncated fifth wave, followed by a 3-wave corrective pattern. However, this part here is a little bit messy. That's why we decided we focus on the part that we can relatively clearly label. Not much changed since yesterday. Obviously, on an 8-hour chart, we got 3 new candles overall. As I mentioned, I expect a little bit more downside, although the 61.8 retracement would offer itself for a turnaround point. For my position, it doesn't matter that much. I'm long-term bullish, so I believe that this is a set wave 1, wave 2, wave 3, wave 4, not finished yet, and that we have yet to see wave 5 at least. Therefore, especially also because I'm writing covered calls against my shares, I don't mind if we're trading sideways or a little bit down for some time to actually earn additional premium from writing those covered calls. As said, nothing changed here. 2 options on the chart. Option number 1, this is A, B, and C, the entire correction. Option number 2, this is only wave A. We'll get a wave B, and then we'll get a wave C that takes us a little bit further temporarily. However, it does not change the overall labeling that would assume that we have wave 1, wave 2, wave 3, wave 4. That again could be finished here, could again drag out a little bit in time and price, and then we should get our wave 5. So we'll just sit tight and let it play out, and hopefully we're not completely wrong. But I'm fairly confident that it will play out something like this and that we have more upside here. Moving on, Barnes & Noble Education Inc., our usual suspect here. Yeah, we're still waiting for a distinct movement. I'm fairly certain about what we've labeled here, the 1, 2, 3, 4, 5 impulsive wave, followed by an A, B, C 3-wave corrective pattern that happens to turn around perfectly at the 61.8 retracement level, and also the 100% expansion level for wave A, B, C, meaning wave A and wave C are almost identical in price movement, which is pretty much as like a zigzag in the book. Yeah. However, I'm not super happy with our diagonal pattern here that we labeled like 1, 2, 3, 4, 5, because if it's a diagonal, it would only be the first wave of an impulse, of a bigger impulsive pattern. So we're still waiting, and as a result, we're also not 100% sure about this corrective move right now. It's possible that it finished here at the 78.6 retracement level, and that from here we are now looking at the next 1, 2, 3, 4, 5 movement upwards. But we'll just have to wait and see how this develops. Moving on, immersion. Yeah, we are currently still in a corrective phase. I expect more short-term downside, at least to $7.60 per share, or potentially down to $6.20 per share. We're still going to hold our position because after that we should get to see further upwards movement. Costs we labeled yesterday as good as we could, and basically I still have no clear opinion on this entire part here, because while technically it could be that this entire thing will be the 3rd wave and with more upside, from the visual aspects, it looks like we have 5 waves, 3 waves, 3 waves, 5 waves, which would make this a corrective move and actually point towards some downside. Now, our exposure in calls is a total of $1,000 and the position is currently red. So it's not such a big position, especially not compared to what we hold in GameStop right now. And I'm overall still bullish. However, there is the possibility that we get more downside here. If we were to break the line here at around $3.98, so $4, then we would have confirmation that this is only a corrective move and that we're about to see another strong move further down, lower than here, which means if we break the $4 mark, I would actually cut my losses. However, until that happens, or until we get another clear sign here of what's going on Elliott Wave wise, we are just going to hold our position and assume that we are indeed right until this point, which would mean even if we cannot label this properly, if we are right until here, we would in fact be now in a third wave up, so there would be more upside to expect. NEO, we're still in the waiting position for the confirmation if our correction finally finished here, so also unchanged. Yeah, there's not much to do. We have a clear 1, 2, 3, 4, 5 pattern up here. We have a not so clear corrective move down here that already retraced more, or around 78.6%. So we get in the area, if we break 363 to the bottom, there would be more downside and we should cut our losses. However, as long as we stay above 363, we actually can expect that this is a set impulsive wave up, corrective wave down, and further upside to come. As said, for now, we are here in a waiting position. That sums up all our stock holdings for now, and it brings us into the crypto realm where, again, we'll have to relabel our Bitcoin labeling. Visually, actually, on the daily chart, this would look like this. So just to label it real quick. 1, 2, 3, potentially here or here, 4 and 5. Yeah, especially, or 3 not even finished yet, or it's here. So because wave 3 would then look like this: 1, 2, 3, 4, and 5. Yeah, so this actually would make sense, which means that potentially, again, we have to relabel it. This is just a first glance, yeah, like estimate, or what I recognize on first glance on the daily chart, which means we would expect, or we consider it possible, that we right now would correct down to the 38.2% retracement at 82,640, after which we should still get a fifth wave. Yeah, that would be, we don't have to retrace that far. I'm just saying that would be on first glance what this appears to be. 1, 2, 3, 4, 5. Let's actually check how far we retraced here for not this, for this third wave. So 38.2. So we didn't fully reach the 38.2 retracement here. So, but still, from everything that we have on the chart right now, we're gonna get rid of the elements that we are not that sure of. So that we would have to revalidate, which would be this one as well, and then this one, and then this one. And yeah, so I think this kind of like makes more sense. We'll have to consider how it is in the bigger picture, because we have a corrective wave here, which means this is also part of an impulsive wave. But I believe that even if we were to correct down here, that after that there's still a push to come with more upside. Obviously, this can drag out a little bit in time, but that's the first glance assumption for Bitcoin here. And with that, we can move on a little bit. H&T now should still have a little bit more downside to get below the low that we had at $3. So ideally here, 260 would be the perfect point to make this a perfect ABC pattern, at least in terms of relationship wave A to wave C. And then there should be more upside to come. XRP, yeah, we have to relabel, but from the glance of it, we expect sideways and downwards movement. And XYO, as said, could be that the correction finished here and we're going up, in which case there would still be more than 100% upside to our minimum target. But right now, we'll have to relabel this entire section here to actually have a clearer picture. Let's take a look at SMCI. Again, another green day. Yeah, points towards, so while I personally believe that SMCI will sooner or later end up at the $5 mark, but if we visually look at this part here right now, it points towards this we already, yeah, so it points towards this being potentially, again, we don't have any solid proof yet, but high is 49.86, 49.60. This being a free wave move where we would expect, as I mentioned in yesterday's episode as well, upside for this to become an ABC before we then get another 5 waves down. That would then bring us a profit target. So that would then be wave A. And then depending on where we finish, we can see that our minimum profit target would already be the $15 mark for wave C, or 20. We actually should go lower, so it should be below where we were here, and here we were around $17. So I think that, and that's with the minimum target, the maximum target would be lower. As I said, personally, I expect that we will see the 61.8 retracement at $5.68 eventually. So, but that still leaves temporarily, if this is an ABC corrective move, that still leaves the potential for 100% upside here. If we, and only if we break the $75 mark here, would I be worried about being wrong and that we actually are going to see further upside in this hugely, in my opinion, overvalued stock. But we set the scaling, and let's take a look. NVIDIA having another green day. Yeah, we'll have to update our labeling here. So we can see that there is potentially 1, 2, 3, 4, and we would right now be in wave 5. But here we are not fully happy with especially this retracement. Did wave 5 finish here and finish as some kind of diagonal? And we're now entering a corrective territory, in which case we would be correcting potential this entire move. So there would be a lot of downside. Or is there still further upside? I think if we were to break the low at 195, that would be the indication of we are definitely correcting the entire move, or at least huge parts of that move. And like any long position would be irrelevant for a couple of years, considering, a year or two for considering what we're looking at here. But we'll have to relabel that, or label the bigger picture to be actually sure. Frontline, we caught the dip, or we forecasted the earnings drop very, very well. We hit the 50% target. Looking at this now, I actually, I'm still a little bit torn. There is the possibility that this is the end of the correction. There are a few things that point towards that. So we have a potential, maybe 1, 2, 3, 4, 5, or 1, 2. So 1, 2, 3, 1, 2, 3. So something like that. Which makes this potentially a 4th wave here of the previous 1, 2, 3, 4, 5, which means it's possible that this is the end of the correction. From here, we'll actually get further upside, especially since we labeled this here as a bigger wave, or a bigger degree 3rd wave, which means it's possible, as said, that this is the end of the correction. If this is the end of the correction, we can see the upside that we get is at least to $35, so still 100% upside. But it's also possible that this is only 1, 2, 3, 4, and we'll get another wave 5, A, B, C, and another 5 waves down to terminate somewhere lower. However, risk-reward ratio is actually not that bad. We have around a little bit less than 50% risk, even from the current price, so down to around we have 50% risk roughly, and at least 100% upside even at the current values. Although we even have less risk because one could set a stop loss if one wants at 13, 17 already. So if this is not the end of the correction, to get out here, and in this case lose around 20%, whereas if it's the end of the correction, pocket at least close to 100%, and potentially potentially a little bit more, as we can see, then the maximum targeting quotes would be around $60. So keep that in mind. And I think with that we actually have it for today. If there are no questions in the chat or requests to look at something specific, I'm actually going to call it a day because I'm a little bit behind with everything I wanted to do today. So as always, let's switch here. As always, like Gabriela says, don't forget, grab your free copy. So read it online for free, Elliott Wave Principle. In my opinion, the most reliable forecasting strategy out there. You will not always be able in every asset to find the valid pattern or a valid forecast, and corrections might sometimes be frustrating to label. But overall, if you're not focused on a single stock or asset, but you're willing to look through 10, 20 to find one that shows you a clear pattern, it's usually, in my opinion, very, 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 very reliable. So don't forget to grab your copy. Anyway, I hope you were able to take something positive or informative away from today's stream. Don't forget, hit the thumbs up button. Really makes a difference for the stream itself or for the ranking of the stream. And with that, I'm going to wish each and every one of you a pleasant weekend ahead, and see you then all on Monday with another episode of Daily Market Mastery. Till then, bye-bye.